to another market breakdown. So this is Leo from Bit the Market, and today we're going to be looking at the E-mini or the SP500 chart. So you usually use this chart as an indication of risk on, risk off regimes, but I have noticed also that recently we have been switching to risk aversion, which is typically investors avoid taking any risks, so they tend to go to safe havens. And safe havens, they are usually can see this on the currency market by watching the yen and also gold. So I've been noticing gold have been being both so much, and that's why I closed my long position on the E-mini. I bought here. You see this line around there at the yearly open. So usually this is bullish sign for me, and I'm still not initiating. I'm not shorting yet the market because I have still doubting this market so much that we can usually have another leg higher and then come lower. Why? Okay, this is the psychology of the market, and if there is no other crash is gonna happen, so this is most likely is gonna happen. All right. So how are we gonna approach this? What the bulls see here, like what is the argument? They have this is an extended leg, and it is not going like straight forward like this one. This is coming sideways. Okay, and we have built one, two, three. What is that? That's a wedge. And a wedge pattern, whenever that happens, there is a high chance the probability that we're gonna go two legs up. So I can see the argument of the bulls is still valid. They have high one coming back and then another high. That's two-legged pullback for me. And then I will be studying the shorts from here, from this level. But we are still in the middle, below the middle of the range. If you take your Fibonacci level from up to low, this is the mid, and this is a key level for me. So once we close above at least one monthly, I can play the long side into these levels. Okay, so also I'm gonna share with you another trick about price action that probably is not being discussed in the community at all, and this is completely psychology. Let's say you were buying this market, you buy the clothes, you buy there is algorithms, there is computers, they buy at the market once the monthly closes. Okay, and it's not you or me as a trader do that, but those high frequency traders or high frequency computers, they do that automatically. So they were buying at the market, and that's a profitable strategy. Except here the bulls who bought this close now are trapped in a losing trade, and there are two possibilities for them to get out. All right. The first possibility is the market comes back to the entry to this level and they get out at break even. And that's where you're gonna get the second leg. I highly doubt this because I am into the camp of this is a one, two, and then we come lower. Or we come lower from here, straightforward from here. All right. And what is my validation? I'm gonna share it with you here. If we get one bar closing below this level, one bar, like literally one close of the weekly bar below this level. So what is the psychology about that is that we are below the yearly open, and traders pay attention to that. Once the bar becomes red on the yearly, there is panic sell off that happens, and also computers do that. It's not just traders, and that's what I'm looking for. So since we're still rejecting the yearly open, this is still have the chance to go up, and then maybe the second leg lower. Another trick I'm gonna share with you here probably is gonna make the video a little bit longer, but I don't think you're gonna find this anywhere. And this is all about the psychology. You say you both here. So the ones who bought here, they wait for a signal bar. And the only good signal bar, this is not a good signal bar, by the way, because it is around the resistance. But this one is a good signal bar. What do you do these bulls? Except waiting all the year or maybe 2 years for the market to come here and they get out or break even, they buy more at this signal bar. They buy the close or they buy just one tick above the bar. And they get out with a profit at their first order with a loss in this, no, on the second position, they get out with a profit. And also they get out with a loss on this, which is around break even on all the trade, and they will wait until the market comes lower for them to buy again. Okay, how we're gonna find that the level? Simply you take, so let's say you bought here, and then you bought one tick above this. All right, this is the level, and it is around this high. So once this high is being taken, I'm shorting the market. Okay, this is my plan, the big short for me that I'm gonna do. And how I'm gonna do that, it just once the market comes here, the V doesn't close up and start deviating lower, I'm shorting for a second leg lower. How far can we go? I have this in mind. I'm not saying this is gonna go up, by the way. I'm saying if we go up, that's my plan to short the market. And also, if this doesn't go up from here and just slims lower from here, because this is also a good signal where for the bears, they might actually push the market lower and we come lower here, where I'm gonna try to long. And also there, we still have this trend line that typically has been tested many times, and the market sometimes wants to visit that and see if there is buyers there. Okay, and how did I find this level? It's not random. There is one price around this, all these price action. There is only one price that you should focus on, which is the 4,000 big round number. This one. This is the only price. You probably, I don't know if you were trading here, and I still remember this. We gapped up from a round number. Usually that's lead to uh, a measured move. What is a measured move is that from this low, so this is the last swing low, if you check that from 4,000 and we gapped above that, that's a gap on the daily, on the weekly, and the monthly. And we got that measured move, and that's where the market sold off. This is the art of price action. I'm not sure you're gonna really find this by your indicator or moving averages. This is just price action, and this is just how the market functions and psychology. This high was so important for me that I started shorting all year. I was just looking for shorts, where a lot were buying the market. Anyways, so since we have achieved the target there of this measured move, more like this is, I see this as a first move, the first leg, and I see this as a wedge, one, two, three, and this is also a parabolic wedge. Whenever you see an acceleration like this, and we break lower, this is the signal bar for the bears. It usually leads to another leg lower. How the leg is gonna come? There are two possibilities. I just did them. The first one we come here and then we have a triangle. This is gonna be one, two, three, and then the five is gonna be a breakout higher. Or we come here and we make another leg. If you measure this leg, with this leg is gonna take us to this number. And why this number is so important for me, I said the only important price here is the 4,000. And if you make another measured move based on that price, is gonna take you exactly where my green line, which is also always the Big, I'm gonna be buying there blindly. Okay, I'm gonna only be honest with you, but I'm gonna buy in on. I'm gonna be buying Vanguard. I bought Vanguard here, but I closed it because there was too much stress for me. Because all I was hoping for is this 13%, and I was like, okay, the risk is not really worth it uh, compared to the downfall if we come lower. I have to wait so much with a losing position, and I have to buy more here, and then it's gonna be just torture, all right? With the banks falling and all of these bullshits going on macro now, I just closed it, all right? Also, one of the things I use is the dollar. Dollar in a very key level for me that this can just sell off. There is a reverse correlation between the dollar and the E-mini. That's why I closed my longs. But anyways, are we gonna have this and then come lower, or are we gonna just sell off from here? A sell off from here, I need a weekly close below this level for confirmation, and then I'm gonna be building a short position. Right now, since this still holding, this level still holding, we can literally easily go up, and that's what I'm going to be shorting for lower. I hope this analysis is clear, and the psychology about the market is also clear. Is nothing here so complicated, but once you actually watch what the price is doing for a long time, you're gonna start noticing this stuff's happening all the time. But this is still a high probability that we're gonna, because we took this low and now we are protecting this low, we can actually go higher. Okay, I'm not gonna be I will, for me, if we close below this, I'm going short. There's a high chance. Why? Because we are still below the mid of the range, the mid of all of this move from up to low. That's my opinion on the stock market in general. And are we gonna have this move higher for a high probability sell off? Is this, or are we gonna check it just from here? I I don't know now. Now I don't know, so I need more information about the market. And here it was so much stress. If you look at the daily here, it's just so much messy. Yeah, we rejected the yearly open here, and there were some trapped beers here, and they got out as break even, and that's why I was getting long here. And this is still really messy, but this can just do another leg lower. It's easily done there. Anyways, guys, I think that's my opinion about the stock market right now. This is gonna be a high probability sell off for me. Is from this level. Second level, I need a close below this on the weekly. I need a close, just one bar close in here is gonna confirm my bias that we're gonna actually go visit the lows. And if it starts just arranging and then coming sideways lower. All right. I hope everything is clear and crystal clear about the state of the stock market. And catch with you another with another market breakdown.